If you're still losing money in trading, you need to understand liquidity. It's by far one of the most used concepts in the entire space, and it's definitely one of the few things that truly exist in trading. So what exactly is liquidity and how can you use it in order to make money in the market? This is exactly what I'm going to teach you guys in this video, so stay tuned and I would say we get straight into the sauce. So with that being said, the first question is, what is liquidity? And if you hear the word liquidity, you just know a lot of people around the world are talking about this concept and using it on a daily basis. So if you're struggling to understand what it is, let me keep it completely simple so you can follow along and be like smart as well when it comes to trading, so you don't get confused when you hear the term of liquidity. Liquidity is essentially two things, right? So I would explain it like we have stop orders, like a stop loss. I hope you guys are using a stop loss when trading. If you don't, you're definitely doing something wrong, right? Use a stop loss when trading, or otherwise you will blow your account like infinite amount of times and you don't want to do that, so use a stop loss. And the second thing I want to talk about is limit orders. I think a lot of people nowadays don't really use limit orders anymore, but I myself use them a lot. As you guys know, I'm a supply and demand trader. I trade supply and demand zones, like for example, we have one right here. So I would oftentimes take a limit sell of such positions, so I can keep my risk simple and I don't need to look at the market 24/7 when I miss a setup. Or in this example, you can see that price never really reaches back into my limit order until just over here. But that's so far away in time, I wouldn't have taken this trade anyway. But as you can see, it would be pretty nice if the market would have came back, fill my limit order and then head straight into my profit. So that's basically what a limit order is. So now you guys wonder, what is this and how can we use it in our trading? Yeah, wait, we get to that soon, but let me first explain simple concepts. So a quick question for you guys. In this market situation right here, where would the amount of liquidity be? In this type of situation, only the things I marked out right now on the chart. Where is the liquidity? Where is the liquidity, guys? It's completely obvious that there is liquidity right above here. And I mean a lot of liquidity was right above here. Obviously, it's not the current market situation right now, so there's probably nothing above there right now at this level. But you still can see that there was a lot of liquidity. And you can see as well that we got a liquidity sweep right off the bat right here. You can see this little wick is where the liquidity got taken out and the big player stepped into the market. That's why we got this huge move to the downside right here in a matter of a few hours, okay? You saw we got the liquidity taken out right here, but it's important that you ask yourself the question when you are trading, and that is, where is liquidity currently? You need to understand this because otherwise you get faked out. If you put your stop loss right above these highs, which a lot of people do, and I myself use my stop loss above highs and below lows, right? So if you see this, if we are taking this trade and I would entry right here, my stop loss would be right below this low. So it's important that I ask myself whenever I take a trade, where is liquidity? Where is liquidity currently? That's a very important question because otherwise the trade can go against me pretty soon and head straight back into my favor. It just stopped me out so they can use me, they can use my money in order to fill their positions. So a lot of institutions and the big traders are using liquidity and they need the liquidity to fill their big orders. Let's say you want to take a $1 million position. Like you have this heavy pool of money. This is all your money, right? You are a bank. You want to fill all your orders in the trading market. And then this is my liquidity as a retail trader, right? This is our liquidity. And they need a lot of retail trader orders to exchange the money so they can take our money and fill their big money in the market and actually move it a little bit. So that's when we need to ask ourselves where the liquidity is and why it's so important that you guys start doing that whenever you take a trade. And matter of fact, before you take a trade, hopefully. So as you can see right here, before all this kind of stuff happened, like don't think of this for a second. You can see that there is liquidity right above this high on the 4-hour time frame and right above this high. So let's say you want to take a trade. Would you actually, the liquidity got taken out right here, so let's take it off our charts. We don't need to look at it. But let's say this all didn't happen, okay? And we are right here and you want to take a trade. So if you're taking a trade, you will most likely, and most of you guys will do that, you will put your stop loss right here above the high and you think, oh, easy, I can make a lot of money if the price goes down here. But you're actually wrong. You need to wait till the liquidity sweep happens, till a clear liquidity sweep happens. And when do you guys know that that is a liquidity sweep? Because we got actually a huge reaction off from that. Did we get a, let me actually delete this drawing. Did we get a reaction when price swept this liquidity? Yes, we got a red candle, a fat red candle, yes, we got it. But the price didn't really end up doing much. And if you take the next liquidity sweep, which we can see right here, you see that this is a fucking huge rejection from the market, guys. This is huge. And I mean huge. And the next candle goes even further down. So you can see that it's almost like, I don't know how much money swept out of the markets and the big money makers are straight heading back. And then they draw the price intentionally back to their original sweep. And as you can see, they fill bigger orders again and it goes straight down to previous market structure, right? So let me take this off. And that is a question you guys should be asking yourself when trading. Where is liquidity currently? Very important that you guys start thinking of that before you do anything else. So now that we have taken all this information and you guys now know what liquidity is and how you can spot it on the market, and you always, question I tell myself is, where would my stop loss be, right? This is also a good question you guys can ask yourself if you don't want it too complicated. Where would my stop loss be? This is a good question I myself ask on a daily basis, and a question you should answer before you take a trade as well. So as you can see, let's say I will take a trade right here. My stop loss probably would be under this low right here. Or if you want to take a swing trade, you would probably put it under this low right here. So you can see that's two valid points to put your stop loss. I would only really consider this a valid stop loss if we break structure right here. So once price comes up here, you can maybe adjust your stop loss to this level. But that's a thing for another video. And I don't want to go too deep into the stop loss management right now. But stop loss management is definitely also a really important thing you use when trading. So that's a question you guys can ask yourself. Where would my stop loss be? And then you guys automatically know that a lot of people, like 99% of retail traders, put their stop loss also on one of these levels. And yeah, that's pretty much it. I want to show you guys one other example so you can just know how to use it. And yeah, we can see right here that we have a really nice low. You can see this is a low. And the low gets taken out by a liquidity sweep. So remember when I told you where would your stop loss be? Right here when you take a trade anytime here. You would put your stop loss below this level. And what would end up happening is that you get stopped out immediately and you'd be like, oh no, why is the market going against me? But now that you understand the concept of liquidity and know there are some people and the big banks need to do that. They can't do it anywhere else. Like they need to fill their orders, right? They want to make money as well. So you need to look at it and be like, okay, now they're taking their money out and you know for a fact that in the next few hours, since this has happened, the market probably won't do another liquidity sweep. Like the probability of the market makers doing another liquidity sweep so soon is lower. And that's essentially where I come into play, because I don't want to trade when I know there are some people sitting in front of their computers and thinking of they want to take my liquidity in order to fill their positions. I don't want them to do that. I want to make money myself, okay? So this is, I think you can still be profitable if this is happening to you 1 or 2 times a week, but you still need to look at it so you can avoid unnecessary losses in your trading. I hope this video helped you guys. I would highly appreciate if you guys could follow the channel and leave a like. Also comment below on what you guys want a tutorial on next, and I make my best to help you guys out staying profitable. And yeah, hopefully you have a great green week ahead of you, and I wish you guys all the best. See you.